Good afternoon to all. My name is Richard Volsteck. I'm president of the American Chamber here in Hong Kong. Welcome to a high-powered panel today. This is a rescheduled event. We're sorry to put things in December when, of course, no one's doing anything except packing for vacation. We know. Now, it's a very busy time for everybody, but this was a first-class panel put together earlier by our Financial Services Committee, and we wanted to make sure that we could not get through the end of the year without doing it. A lot of thanks to our panel members for making the adjustments. We're going to be very efficient. I'm going to say next to nothing except welcome and pass it to Rebecca, who will kind of outline the game plan for the program today. As always at the American Chamber, whether it's a speaker event or a panel event, we always leave time for questions. And respectful of your time, we'll be out of here by 2 o'clock as well. In at 2 o'clock, you can always stay over and talk one-on-one with the panelists if you're so inclined. So again, thank you for coming. Afterwards, those of you with the blue name tags, please talk to the gray guys and tell them, it's time to switch color and join the chamber. We are going to be videographing this one, videotaping, what do you want to call it, digitalizing it. Please turn off your phones and anything else that beeps or whines so we don't mess up the recording and the discussion. Thank you very much. Over to you, Rebecca.
Thanks, Richard. Hi, I'm Rebecca from ASIFMA. For those of you who don't know us, we're a financial trade association. We are independent and regional. Our primary purpose is to sort of harness the collective and shared interest of the industry to promote the development of deep liquid capital markets, as well as advocate for the stable, competitive, and efficient markets which we believe support the region's economic growth. I run the Policy and Regulatory Affairs team, and RMB Internationalization is something that the organization has been looking at and working on pretty much since the inception. I've had the pleasure to work with these two experts since the inception as well. So Lisa O'Connor from Standard Chartered and Alex Madonna from SWIFT, obviously major players in this particular asset class. And as I said, again, really has been in the offshore market since there was a market to speak of. To start us off, I'm going to give a sort of broad overview of RMB internationalization, and I'm going to sort of look at it from the past. How have we got to where we are? Then Alex is going to jump in and speak about the markets as they are today, some of the exciting new percentages and all of the important developments that represent the market today. And then Lisa's going to offer us some forecasts about how this market can continue to develop. It's been approximately 7 years since China first initiated its program to internationalize the RMB. This has been largely a unique and important case study of using a policy objective to achieve financial reform. It's unique because it wasn't necessarily a market or demand-driven process. It really focused on bringing certain policies to the market that created this incredibly important development. Sorry, I'm not very tech savvy. So China's financial, this slide is looking at the 4 important pillars for financial market reform. So first we have the RMB internationalization. As I said, it really began to create the offshore market around 2007. And the authorities steadily have expanded foreign investors and end users' access to RMB for trade and investment purposes. Then we've also started to see increasingly exchange rate liberalization. This is the incremental relaxation of the exchange rate policies. And right now we still have a slight differential between the onshore and offshore rates. And so we see another opportunity for future liberalization in this regard. And then we have the capital account convertibility. There has been gradual liberalization in this area as well since about Q3 2003, and this has enabled the exchange and convertibility of RMB into foreign currencies, mostly trade finance driven. And the PBOC has publicly stated that he wants to achieve basic convertibility of the RMB by 2015. So next year, people. Interest rate liberalization is sort of the final pillar for their financial market reforms, and this is where we move towards market-based interest rates. And if you've read the newspaper, we're beginning to see that happen already. First, it was the PBOC lifting the caps on the lending rates, and now creating some sort of test sites like the Financial Free Trade Zone, where interest rates can move by market demand. I'm not going to go into this slide in too much detail, but this is basically how China has approached internationalization. First, through its trade currency policies, using the RMB to settle trades and other current account transactions, then moving towards an investment currency. This allowed for increasing use in cross-border transactions for finance and investment, and then finally as a reserve currency. And this is an important element that China has yet to achieve, though you do see more than 40 central banks currently holding RMB reserves. These are very small percentages of their total reserves, but as I said, 40 central banks are now currently using RMB in their reserves. So the conditions for RMB internationalization really are to create breadth, which is the availability of a broad range of financial instruments, including markets for hedging risk, which is critical to being able to use it as a true investment currency. Depth, large volumes of financial instruments, whether these are Panda bonds, Dim Sum bonds, Stock Connect, a variety of other investment vehicles, and then liquidity, meaning that there's a high level of turnover. We were just talking on the panel in the run-up to the session that the primary markets are very well documented, but the secondary markets are a bit opaque. How much volume is sloshing around the system, or is this more of a buy and hold play? You can see in this slide there's a timeline of some of the major policy developments to create this breadth, depth, and liquidity. So these are the 9 elements that remain for China to do to create this true and fully convertible currency. Even though there's been very rapid and significant progress, work still remains to be done. And especially if China wants to meet its stated objective of having a convertible currency by 2015. So, each one of these represents an important market development, and without these elements, we will not see 2015 become a reality. And finally, this last slide is how is it that the policy interventions have actually created an increasingly internationalized currency. And so we've gone through the current slate of financial instruments and look at them in comparison to their ability to help internationalize the currency. Now, Alex is going to run us through some of the current issues in RMB development. These slides will be available, all of our slides will be available, so if you'd like to refer to any of the existing items, you will have the opportunity to do so.
Thank you. So, what do I do?
Oh, wait, no, sorry.
So once we do that, I represent SWIFT. If you don't know, if you haven't used SWIFT, basically all your money, your salaries, central bank money, are sent, processed onto SWIFT. It's the biggest network that was created 40 years ago by banks, to process first payments, and then I guess another 20 years ago, all securities, custody business, trustee business. I have 2 jobs. One is to look at post rates, or my business card says, sorry, I thought I had a good voice. It's winter. I have two jobs. One is to look at post-trade automation on the sell side and buy side, because I come from that world, you know, the securities world, and the other is RMB. Today, what I want to talk about is really from a data standpoint, you know, what we see. We always talk about internationalization, and I got bored, I got fed up with that internationalization. Why? In my mind, it has happened. All right, it's not fully convertible. The capital account is not fully open yet. Whether it will happen in 2015, I don't know. You know, I think maybe you have a view. I'm just working from a network provider. But I wanted to look at the steps that had happened before and the data, what the data tell us about what I call the globalization. Now, the globalization is really when there's a transaction between two counterparties, whether it's trade finance, FX, securities, you name it, payments, and none of the counterparties, none of the legs are either in China, Hong Kong, or Macau. Yeah, Macau matters in this respect. So none of these participants. That's what I call globalization. And I found some interesting data. I was really surprised. So we'll start with high level, where we talk about the evolution of payments. All that data is taken from what we call watch. When there are transactions on our network, we have the right to look at it, but we have the right to look at where it comes from to where it goes. We don't have the right to look at much more details. And every month we have a product. It's a tracker. It's free of charge. Anybody who wants it, you know, send me an email and I'll deal with it. And that tracker will give you a few snippets. One is the position of RMB in the grand scheme of international payments. And we try to give thought leadership on month-on-month basis. 2 months ago, I looked at the globalization. Last month, what was it? We looked at what we call the river, and I will mention it. So these are the things I will talk about. That is the first page of the tracker. RMB number 7. I got quite excited, which is easy for me, but last September, I like data, by the way, so excited just on data, whereby RMB was touching upon Canadian dollar. 172% and Canadian dollar was 178, because if we mention full convertibility, RMB has to step up. And there are views that not only Canadian dollar, but Australian dollar and Japanese yen will be overtaken. There's no question about that. It's just a case of when. And I was quite excited last September to think, hey, we're nearly there, so that it's on the verge of being number 6, number 5. To be honest, there's many factors as to why RMB hasn't overtaken yet the other currencies, and they are not a single one. It could be confidence into China. It could be a slowdown of China. It could be Occupy Hong Kong. It could be many explanations. Next slide is the evolution of payments. As you can see, when we start in 2012, there was 78%, 80% in Hong Kong. Hong Kong has always been given the priority, you know, first clearing, RTGS and so forth, dim sum bond. You know, when we talk about bond market, we always think Hong Kong, even if we have Formosa, Lion City, whatever, you know, City of London bonds and Toronto. And by the way, we look at percentages, all right? So that is very critical. I can't tell you that in January 2012 it was X and today is X. I don't have the right to give you that. But what you can see is that roughly Hong Kong hover around the 70%. Now, that 70% today is much larger than the 80%. You don't need a PhD in mathematics to find that. But what is interesting is that, as Rebecca mentioned, with the internationalization, the clearing hubs, the facilities, the swap lines, the reserve currency that have happened, the 27% is wider, and I'll come back to that. It's a gradual but certain. Remember I talked about the river. So the river, we've decided that 10% of your payments in RMB was as good as any data or mark as any other. It could have been 15, 20, we said 10%. So the line that says if you use RMB for more than 10%, we call it the river. Out of 161 countries who use RMB today, 50 have crossed the river, which is on the right-hand side. On the left-hand side is how much of that percentage of renminbi is in relation to your trade with China. So for argument's sake, if I take United States, it's quite large. It's hovering around the 12-15% of their trade with China, their volume. But in terms of how they pay, guess what? Again, not rocket science. I prefer to use US dollar because I'm a US firm. Interestingly, you have Italy on the total opposite end, which is quite surprising, which is 30-40% of I prefer to use renminbi. I don't have a view as to why. Maybe you have that, but there's no surprise as to Korea, Taiwan, Singapore there. Very, very quickly, Rebecca mentioned. So that's why I got bored with internationalization. It's done, right? And if you look at, it seems to accelerate a little bit. You know, in November, we had Toronto, we had Los Angeles, we had Malaysia, we had Qatar. And it seems that now we are in a more structured way to agree how China deals with internationalization. I'll give you, we agree a swap line, we agree a RQ fee, and by the way, I have 4 banks, you choose one, or maybe I tell you which one to use, and that will be your clearing bank. So we've seen that with, Qatar and others. It's a gentle, by the way, I feel that swap line are just in case. It's just to provide liquidity. You mentioned that 40 banks are using renminbi in reserve currency. To what percentage, we don't have a view, but is there. Dim Sum Bond, Hong Kong Shanghai Connect, which I started with a bang and not so much since, but there are reasons, I think, for that. Interestingly, which I didn't mention here, apologies, because news, they happen every day. Sometimes you have a few news a day, and I put that slide a couple of weeks ago, but RQDIs, which is an interesting development. RQDIs is really, I'm a company, I'm an asset manager, securities or whatever, in China. I can invest renminbi outside of China in securities, in derivatives, in anywhere. It's another step. By the way, that's my feeling. None of the steps are more important than one another. In isolation, a swap line is nothing. It's a liquidity, it's a gentleman agreement. A reserve currency is nice, but all of them together are very powerful steps towards internationalization. Again, 2015, it's December 2014, we shall see. We even talked about QDR. Now is when somebody like you or me in China, registered, of course, with enough funds, could invest outside of China in renminbi. That's very, very powerful. Again, liquidity. Get out the liquidity outside of China. Finally, on this slide, I think another step, which is the level of authorization that you do not need now to invest outside of China. Before, I think it's before October, you need to have the approval of the Ministry of Commerce for anything over 100 million US. it's a significant amount. But if you're a company investing, whether in real estate or acquiring, it's not that much. Now, anything under $1 billion US does not need any authorization. That's enormous. I'll move on to that's what got me out of bed, a couple of months ago, and it's to look at what I call the globalization. Now, in payments, trade finance, FX, and securities, by the way, they are based on messages that we capture on our network. So it's fair to say that securities, it's the complete picture. Not so fair to say that trade finance is the complete picture. And FX and payments is you could say it's roughly up there. Now, I remember, I'll let you know again, let me repeat myself, is any transaction where no China, no Hong Kong or Macau is involved. And what I find very interesting is that my surprise, because I come from that world securities, is that up to 28% is settled. There are settlements confirmations sent by custodian is settled outside of China. Very interesting, which means that there's confidence in the usage of renminbi as an investment. There's confidence that we can settle, we can use the paper in Eurobond, Luxembourg, and other jurisdictions. So I find that a very interesting slide. I put the two circles in payments and trade finance because, to me, internationalization will have these two markers. It won't be securities. FX, FX really is a play in New York and most likely in London. Whether it increases or decreases won't tell you that FX as a product is internationalized or renminbi is internationalized. But when you start to pay more in renminbi, when you start to settle trade finance more in renminbi, remember, outside of China, that means you can use that. You have a view of the value of that currency. And that will lead to internationalization. And maybe these two markers will pressurize the authorities to open more. That's a personal view as well. By the way, roughly, correct me if I'm wrong, but in trade finance today, renminbi is the second currency, overtook euros, and it's roughly 15%. 15% of the trade finance settlements is in renminbi. And there's roughly twice as much in goods as in services. I'll go over very, very quickly because Lisa more interesting things to talk about. That's the data. Just to give you a bit of evolution, 776% in payment, enormous. Where? That is this view is about the top 10 offshore renminbi payment centers. By the way, in a couple of months, it might well change. Qatar, by the way, is very, very interesting as a development, as a clearing hub, because it's the first asset owner. I'll mention in another slide the difference I see between Frankfurt, London, and so forth in Europe, but Qatar is quite interesting because they are an asset owner with infrastructure and a lot of money to invest. No surprise there. Singapore, Luxembourg, UCITS, Eurobonds. By the way, all these slides, you can have them for free later on. FX, 238%. No surprise, London is the FX center of the world. I mean, I work there, so I can vouch for that. And this is the evolution of securities. Now, I won't be able to show you the breakdown of the countries, because if I show you Belgium and Luxembourg, guess what? Euroclear and Clearstream. So I cannot show you, but 28% of the settlements in securities are outside of China. Now, the competition is intensifying. You see that Hong Kong on that slide is 63%. That's for everything. Okay, it's for payments, FX, trade finance, but it's very much a Hong Kong play because of proximity, because of understanding, because you can travel from Shenzhen on the MTR and so forth. It's quite easy to use renminbi, and that's the first first come, first serve advantage of Hong Kong. Singapore, UK, and so forth. Interestingly, you have France there, not because I'm French, you know, well, I support my flag today. There and in Germany. Now, a little bit of what I see as to, in this year, there was an acceleration of clearing hubs, particularly in Europe, in London, Frankfurt, Luxembourg, and Paris. And what I see is that London, to me, is the center of innovation in terms of derivatives, in terms of FX, in terms of commodities. Wow, HKX own LME. There's a reason for that. You might see products quoted in RMB in London, benchmarks as well. Although with all the scandals, the benchmarks are moving away from maybe a participant-defined view to more of a automated vendor kind of a way to set up benchmarks. Rule of law as well, very, very important. In terms of Frankfurt, it's a large trade finance partner with China. You mentioned, Rebecca, Panda bond. I don't know if you know what it is, but it's really, when I raise funding, I'm a foreign company and I raise a bond, I issue a bond in China in renminbi. The first one was Daimler, I think in March, and that was 500 million for a one-year bond. Again, that means there's a confidence and I can reuse that funding, whether for investing in China or loaning out to my subsidiary outside of China, because it's possible with the free trade zone now. Very, very quickly, Luxembourg, Euro bonds. The first bond outside of China was in I wanted to say Euroclear, in Luxembourg. Interestingly, on Tuesday there was, as I said, you know, news they come up all the time. You need to keep in touch with that. Now the Luxembourg authorities will fast track approval of UCITS that want to participate in the Hong Kong Shanghai Stock Connect. Very, very interesting, because as you see on the first day, the Shanghai Hong Kong Stock Connect was on one side fully taken, but now nothing happened. So very interesting step. Paris, again, well, I left 13 years ago, so I have nothing to do with that place, but very, very, very interesting. And I believe it's because of the close relationship that France has with Africa. You have the setup, you have the branch setup. So partnering with France is very easy if you want to have movements of funds, of securities or whatnot in renminbi in Africa. There was a survey by HSBC. Sorry, 1 minute, okay. There was a survey with HSBC this year, and that was the confidence about using renminbi, whether you've used it or you will use it. Now, you know, Hong Kong and Taiwan were up there, but the first country was France, and they said around 22%, yes, we will use, or we have been using renminbi. Very interesting. Let me wrap up very, very quickly. No, time, you know. It's the last slide anyway. I think all of that acceleration, it's fine. You can open the account, but you need to standardize now. We stand at Swift as a very strong advocate of standardization with ISO 20022 and so forth. And you can see that when you settle today trades in renminbi, you may have problem because of your system may not understand Chinese character. We put together, and it's you can see it on swift.com, free of charge again. You can see a correspondence of the CCC codes and the Swift code, because it can go up to 10-15% for trade finance, for settlements currencies, and that means manual, that means risk. We are very much engaging the authorities about the Hong Kong and China fund passporting. The participants here in Hong Kong, the fund managers, are asking us, so we have a tripartite conversation with the authorities to make sure that we have standards, because for them, it's a very important step to open the Chinese market for them that will lead to innovation. but it has to be through standardization. Now, last slide. This is the tracker, how it looks like. Send me an email via, Sonia or others. I can add you, and free of charge, you will see the evolution of RMB payments. Voila. Thank you. Thank you.
Can you switch to my side? Okay. Okay, I think you can all hear me. Thank you. Oh. Better? Okay. So my name is Lisa O'Connor. I work at Standard Chartered Bank. My role is running product management for security services and corporate agency and trust for Northeast Asia and Greater China. Prior to this role, I worked in something called client coverage in Standard Chartered, where I worked primarily with central banks, sovereign wealth funds, and investors on the developments around RMB internationalization and what it meant to them. So I was very pleased to hear about Qatar and some other centers that we worked quite hard on in the past, mentioned by Alex. The idea of my presentation was really to give you a little bit of a view into the future, hopefully, if I can get to the right slide here. Okay, here we go. So, Rebecca talked a lot about where we came from. Alex talked a lot about kind of where we are today and also where we came from. So I just thought I'd spend a few minutes mentioning what's underpinning all of this. Clearly, it is a policy-led initiative to internationalize the RMB and to internationalize the currency. If we look back to 1995, from a nominal GDP perspective, China was about 2.4% of the world's nominal GDP. If we look at 2013, that goes up to about 12.4%. And we can see, whereas the forecast in 2019, that's going to be a significant increase in share of nominal GDP. We expect that by 2020, it will eventually make up a quarter of the world's global nominal GDP, which should be a huge increase from where we sit today. So why is this increasing so quickly? Well, everyone knows, because we sit in Hong Kong. China is growing. The pace of growth is quite significant. It's about 7%, and that's outpacing all of the other BRIC economies. So if we look a little bit more, here we go. So what does this lead us to eventually? So we believe that, of course, eventually this is going to lead us to a place where we have global trade patterns that are disconnected from, effectively, the international monetary system. So what does that mean? Right now, in reserves, we have primarily a US dollar reserve system by central banks. However, China is the #1 exporter since 2010 to the rest of the world. So there is a disconnect between global trade and global reserve currencies. Effectively, this disconnect will have to come into alignment in the future, and we're definitely seeing that more and more by some of the trends that were mentioned earlier today. So if we talk about, So if we talk a little bit about how this is happening and how the developments are happening, and Alex had mentioned a bit about Qatar, a bit about Toronto, and when we as banks talk with some of these global central banks and governments, we discuss with them their negotiations with China and how they develop their centers, right? So some of that will include a bilateral swap agreement with China, potentially a clearing bank with China, which will increase the number of services that can be offered, a direct cross between their currency and the Chinese currency, and also things like an RQF quota. Now, what do all of these things really mean? Well, they're all kind of token offerings. There are some things that underpin those. So, for example, a bilateral swap agreement should increase the confidence in the use of RMB as a trade and an investment currency. The clearing bank status, and having a clearing bank in a country, and we have Jack here from Bank of China, so he can probably talk to you more about this, will provide additional services to that center, so things like CNH bank accounts, et cetera. The direct cross will make it less expensive for corporates from that center to do business with China, as they won't have to use necessarily US dollar as an intermediary currency. And things like the RQF then allows a more kind of virtuous cycle back into China for the eventual investment of that currency back into either the equities markets or the interbank bond markets into China. So as Alex rightly said, still 70% of all of the RMB business is done through Hong Kong as a center. However, with the likes of Qatar and Toronto and others coming up more recently, we know that this will diversify over time. Many times we get questions about what will happen, particularly from a Hong Kong perspective, and the pie is just getting bigger. It doesn't mean Hong Kong is necessarily going to lose out. There's just more business really for everyone. So I won't go into any detail on these centers. I'll just move on. So when we talk about RMB as a currency and the use of it, Rebecca had mentioned a little bit about trade, and Alex had mentioned that now RMB is the number 7th currency used in the world. So the path of RMB was always as a trade currency, as an investment currency, and eventually as a reserve currency. So when I focus on the future here, RMB from a current account perspective, from a trade perspective, is fully liberalized. You can use it. You can use RMB to trade with China. You can use RMB as an integrated part of your global cash pool as a corporate. So where are we going next? It's really about the liberalization of the capital account. So it's about the liberalization of RMB as an investment currency and as a reserve currency. So when we look at it, and we look at the increasing globalization and use of the currency, you can see that based against other global indicators, the investments from a China perspective are really not as significant as they should be. So for example, if we look from a GDP and a market cap perspective, the allocation to China as a destination for investment is estimated at just 0.01%, which is significantly underweighted versus the power of China and what's behind it. If we look at it even as a percentage of global stock market capitalization, again, China is significantly underweight. And if we look at it as a percentage of the domestic fund industry, it's also significantly underrepresented. So if we look a little bit more into the cross-border access channels for China. So Alex touched a little bit on some of these. So as you know, for trade, for payments, RMB can be used cross-border quite easily. As an investment currency, you require to have quotas to be able to use the currency to invest into China and or out of China. And those quotas come in different flavors. There's different types of them. And here I decided I would show you all of them, but just focus maybe on the 2 major ones that exist there. So the different flavors you can see are along the left-hand side of the slide. You have QFI, or the Qualified Foreign Institutional Investors. You have RQFI, or the RMB Qualified Foreign Institutional Investors. Things like mutual recognition, et cetera, that you've heard in the market. So if I just focus a little bit on these inbound channels that allow access, QFI has been around for a very long time. It's very much a choice of asset owners for investment, things like sovereign wealth funds, pension funds, et cetera. It has definitely over the last few years tailed off a bit in the number of investors who are applying for these quotas. But we have seen investors topping up, getting more allocation of these quotas. We do eventually see that these quotas will increase over time in the value that each investor has. But we do expect that there won't be really too many more investors applying for these because QFI, while it's a great program, it's not as flexible as some other programs out there. So if we look at RQFI, and we talked about RQFI across the different offshore centers, if we look at RQFI, we know that it started as a Hong Kong center phenomenon, and it quickly expanded over across different centers, including the UK and other domiciles. So RQFI has always been a relatively more flexible program for investments into China. RQFI, you inject RMB into China. Investors prefer this channel because it allows things like daily liquidity of funds, more freedom in their asset allocation, things that really make it more useful for open-ended funds which are offered to the public, like all of you in this room. So it also allows the inclusion of this into UCITS funds, and UCITS funds are quite important in the world of investment because the majority of open-ended funds that are available to the public that are sold through banks like Standard Chartered and HSBC and Bank of China and others are UCITS funds because it provides a common platform where you can launch a fund off of, and it provides a common kind of legal framework around that. So RQFI has been around for a while. In Hong Kong, it has been fully utilized. We are waiting for more quota, and hopefully after Stock Connect, we will get more quota for RQFI. But there's other centers where we're seeing investors that are applying for this access channel. So one of the other key differences in these two access channels and the opening up of access to the onshore market is that RQFI has been preferred by many investors. I mentioned on the asset allocation part, really because it allows them more flexible access to the China interbank bond market. As many of you may know, the China interbank bond market has things like the government bonds, the policy bank bonds in China where investors can gain access to this. The fixed income markets in China have been much more attractive to many global investors and also corporates and everyone because of the returns that can be had. So we've noticed that certainly under QFI and RQFI, since they have started allowing access to the China interbank bond market, many international managers have started to apply for this. And it's a very interesting phenomenon because obviously CSRC wants more activity in the securities market, which we'll get to Stock Connect and what that means. But the interbank bond market has certainly been the flavor under, in particular, RQFI in recent years. So when we are looking at, and maybe I'll just do this one quite quickly for you, when we're looking at RQFI and the future trends of it, there's really no more kind of discussion around who will get the next quota in Hong Kong, what will be the next center of allocation. You know, we expect now that managers will have to compete across regardless of what center they apply from, because they can always domicile their fund in a place like Luxembourg and sell it around the world. Okay. So one of our views is that there certainly is a chance that precursors of who gets the next RQFI quota could be found in who has the bilateral swap agreements around the world. So you might be aware that there are several centers that have swap agreements who haven't negotiated for the quota yet under RQFI, and we do expect that this will be a precursor for that. So some of our center predictions beyond what Alex talked about of the different offshore centers is that we expect this year we could, or sorry, next year, sorry, we could see Luxembourg, we could see Switzerland, and we could see Taiwan finally open up with the local eligibility to allow investors to get RQFI from those centers. So some of our longer term views is that we expect places like Ireland, who are also quite important on the global fund management stage, to get a quota, Japan, Brazil, and potentially even South Africa. So Stock Connects. I'm sure all of you have heard a lot about Stock Connects. I'm sure that this may have not passed you since you watch in the news and you hear about the developments. But Stock Connect is a very significant program for the opening up of the China capital account. The quota size for Stock Connect is also very significant. So we have QFI, we have RQFI, and Stock Connect comes along about 6 months ago, and the announcement on the quota is 300 billion on the northbound. Well, why is that significant? Well, in the offshore market, we have about 900 billion in CNH available in Hong Kong, and that's 1/3 of the CNH, which is in Hong Kong, which could be invested on the northbound route. It's also significant because it's the first time in history where investors do not have to apply for individual quotas, or people like you don't have to have an individual quota, to go invest in the China market. Very interesting because it takes away, it still creates a kind of a closed loop between China and Hong Kong, but it takes away some of the individual control that existed there in the past. So Stock Connect has been a fascinating experiment, I would say. We've noticed in the initial weeks, the first 2 weeks, that there's been about a 2.5% drain week on week in the offshore liquidity. We believe that there'll be about a 10% drain in the medium term until large institutional investors can get into this market. What we saw in the first week was, as Alex rightly said, an initial pop in the use of Stock Connect in day one. This was essentially people getting out of synthetic positions that allowed them to gain access to the A-share market, things like P-notes, and going directly into the market at a lower cost. And what we saw was primarily wealth management, private banking, and some proprietary money, prop money going into that market. What we don't see yet is we don't see the long-only institutional investors going into this market. And the reason that we don't see them going into this market is because there's been a lot of question around the use of Stock Connects under, for example, UCITS funds. So will the CSSF, who's the securities regulator in Luxembourg, allow UCITS funds to include the use of Stock Connect in their funds? And as Alex pointed out, we have pushed quite hard to get the regulator to come out with a clarification around how you could fast track the inclusion of that. Now, that doesn't mean that investors won't have to still go back and amend their offering documents to be able to include this as a channel for use. But the interesting thing is once that's included, we're looking at about 20% quota utilization day on Stock Connect. Once that gets included, we could expect another 40% to be added to Stock Connect almost immediately if all the UCITS funds were to come into this market. In addition to that, the other accelerating factor that we expect on the quota utilization is if MSCI, which is an index, which a lot of investors use as a benchmark to look at their performance, includes 5% free float to China A shares, this will use up 20% on the first day of the inclusion. So we expect that really by mid to late next year, if all of these factors fall in line, we will be up to or close to the 80% utilization that the Hong Kong and Shanghai Exchange agreed they would come to before they sat down and had a discussion around the increase of the quota. So that's my forecast on Stock Connect. If I'm right, you can thank me. If I'm wrong, you can blame Standard Chartered. And I am the accountable executive for it at Standard Chartered, so hopefully I got it right. But it's a very fascinating program. And why am I telling you all of this and boring you about all of these different investment channels? Well, we know that the current account for trade and for payments, it is open. You can use RMB across the border. There's very little limitations at the moment around the use of that. So where do we go to next? I'm talking about the future. All of these cross-border programs which I talked about, whether it's the investment into China, I don't have enough time to cover all of the investment out at the moment, but whether it's in or out, out of China, the cross-border programs will eventually, in our view, converge and will eventually equal the opening up of the capital account. So all of these programs, whether QFII or RQFII, those two will start to look more and more alike one another. CSRC doesn't want to manage multiple programs going forward, we don't believe. We've done a lot of work with them to try to see how can we make these programs look more and more alike one another. But eventually these will converge. Eventually all of the different centers that have our QFII quotas, these will converge as well. Eventually that will converge into Stock Connect, and eventually we will get to the point where we really have an open capital account from an investment perspective. So that's our view of how things are going forward. But somebody had said, oh no, sorry, one more slide. So that's from an investment perspective. So from a trade perspective, it's open, free for use. China's open for business. From an investment perspective, we're under quotas. Our view is they're converging, will be free to use in the future. As a reserve currency, this is where it gets a little bit tricky. As Rebecca mentioned, there are more than 40 central banks who are using RMB as a reserve currency already today. There's no official statistics on this, but we know by conversations, et cetera, that this is happening. The IMF is the governing body, I would say, for reserve currency and the reporting of reserve currencies. And at the moment, they don't allow central banks to report on RMB and their use on RMB. They have to put it into the other currency column. So there's been a lot of lobbying efforts around that. Could that be actually included? But how do we look at and define a reserve currency asset? Well, one, it has to be a widely used currency. We've talked about the increasing international use of the RMB. We've talked about the increasing use of it as a trade currency. It has to be a store of value. So we know that China has a very high rating right now by the rating agencies. And we also know that a lot of countries around the world have been downgraded through the financial crisis. And it also has to have full convertibility. So the IMF, this is the part that they get hung up on, and supposedly rightfully so. There's limited convertibility, and they cite this as one of the reasons and the barriers. And also the managed interest rates, exchange rates, et cetera, as the barriers to include it as a reserve currency. However, there's a lot of arguments that offshore there's not the same barriers, and that eventually it should be included. So to that point, in the future, at some point, IMF will include RMB as a line item, and central banks will be able to report on it. They're already using it. It's just not being reported openly. So where do you think, or where do I think we'll be, I guess, in 2020? Actually, this comes from our research, so you can directly blame them if this is wrong. We don't really see, 2015 is a noble objective, right? When you have conversations with, for example, the central bank in China, the PBOC, they will say that RMB will be fully convertible, however, it will have Chinese characteristics in the future. I don't disagree with any of that. I think that RMB in 2020, our expectations, and I can stand behind these, is that we estimate 28% of China's international trade will be redenominated in RMB. We expect that CNY in the FX market will increasingly accelerate in its use to exceed US dollar 500 billion. And if you're interested in this, there's a survey, that triannual central bank survey that forecasts and looks at the current use of RMB. We do expect that there will be a relatively open capital account. As I talked about, those convergence of those channels, QFI, RQFI, et cetera. From the investment side, we do expect that, there'll still be some controls, but it'll be a relatively open capital account. And we expect that the RMB debt market will grow, and that the RMB will be relatively free-floating, freely used currency, with Shibor as the benchmark for that currency. So that's what I'm hanging on, 2020. I'm not going to say 2015, but 2020 is our estimate. So we really do, believe that there will be continued developments onshore, and offshore and onshore, obviously, will converge towards the future. So that's it, and that's my disclaimer. If I said anything that is wrong, you can also blame that. Yeah, well, I'm going to go through now item by item on that and just make sure you're all fine. But that's it from me. So I guess now we're going to go to questions. Rebecca? Okay.
I think it's, having listened to the presentations, I think there's a couple of elements that are in the slides, but I'll just tie together. What is considered a reserve currency? I mean, we've talked extensively about it in concept, but so the currencies currently considered reserve currency are the US dollar, the Japanese yen, the British pound, the euro. So it's a pretty small club. Having the RMB not be in that club is not a great surprise, considering it's a 7-year-old currency. The fact that it is now very, very rapidly creating a legitimacy for itself to even be considered, and the IMF, quite frankly, is eager to include it, because they see having another Asian currency, especially a trade currency, be in the basket is a critical step for global stability in general. There also is arguments that not every currency within the basket is freely convertible. So the political will to make this adjustment seems to be on the rise. Once that happens, whether it's 2015, 2020, or somewhere in between, I think there will be a rapid acceleration of the internationalization story. Alex mentioned some very important developments just within the last week alone, and I thought I'd just recap them because I think they're extremely important in this whole story. One is that Hong Kong lifted the 20,000 Hong Kong dollar quota limit to facilitate the launch of Stock Connect. That is an incredibly significant step towards this idea of free convertibility. The other important was something Alex mentioned, which is this the onshore RMB pools being able to be invested offshore. This has been a long-awaited development, the RQDI. And this represents another critical step to that opening up of the flow onshore and offshore, which would represent a truly convertible currency. And then we mentioned a few times this idea of the role of the international investor in the internationalization story. Most people invest their money through funds, whether they're mutual funds or pension funds. And all these acronyms that we're using to create this world of international investment is critically important. One of the programs that we mentioned was the funds passporting, or what is known in China as mutual recognition, is another vehicle to bring international investment onshore in China. And This document, I think the name alone stands for the significance of it, which is this mutual recognition between Hong Kong and China. And the fact that China is now ready to start to internationalize its legal frameworks, its investment frameworks, and its capital account cannot be understated as to its importance. This program actually predates Stock Connect, which is the biggest story in the market these days, and it was put on hold to make sure that there was a critical mass. Alex was poo-pooing the interest in Stock Connect. Sigma has a little bit of a different view on this. We see this as a tremendous success, and the stabilizing from the first day of enthusiasm to a gradual increase on a daily basis of the flows as new investors start to enter the market because they have confidence that there's not going to be a big bang, there isn't going to be a huge risk to investing through this program. So I think we'll leave the narrative at that and open up the floor to your questions, please.
My name is Dominic. I'm Dominic. I'm from the Fung Global Institute. My question, it comes actually on maybe the third one of 9 points that you raised about the fungibility of CNH and CMY. Yeah, and really, it's about the nature of the offshore currency. But what the offshore currency actually is something that's confusing me quite a bit. This is a fully convertible currency outside of China, but getting it converted between the onshore and offshore market is still restricted, right? So how quickly do you see these two currencies merging into a single currency? And how, if you go into a period of a global downturn where there's a disciplined liquidity market before the currencies merge, if they eventually merge, what happens to liquidity in CNH? And just on the last thing that you mentioned a moment ago about the Hong Kong $20,000 limit, I think that was raised or lifted because Hong Kong residents now convert into CNH, not into CNY. Right? So they're not actually bringing money into the country, they're playing in the offshore pool. So that was in the HKMA press release, so it's kind of a different thing.
Maybe I'll kick off the answer to that because we have a view on that. To the stickiness of the funds, and what does the China market need to look like in order to retain the interest and not just have a short-term play. I mean, the overall development of the capital markets are critical to China being a truly investable destination. It needs to have much more variety of product. It needs to have a deeper and more consistent and open bond market. There needs to be a robust capital market in order to support the interest long term. We see that happening in every respect. In terms of the fungibility of the offshore markets, we see them as fully fungible. There's all manner of product now that are sweeping the pools into so that they can be better utilized by the big financial firms in offshore markets like London. The amount of liquidity that some firms hold in a variety of different markets, depending on their trade profiles and in their investment profiles, there is now enough that they can converge these pools into single overnight funds. So we see the offshore market as very, very fungible.
I would agree with Rebecca, and just to set a little bit of a backdrop, in the offshore market, there's over 1 trillion RMB of available CNH in deposits, right? So in Hong Kong alone, we have over 900 billion RMB. In the beginning days when I first started on the developments of the offshore RMB market, there was a lot of concern around liquidity and liquidity tightening and what could that mean. And there was a lot of work done by many associations, including ISDA and other people, to look at, if we had to fall back to another currency, could we do it in things like derivatives and repos, et cetera. So over time, I think that concern has fallen a bit away. And just to go back to your point about the differences between the two, ultimately there is only one currency for China. It's the Chinese yuan. The fact that we call it CNH offshore because we have to differentiate it from a rate perspective doesn't mean that it's anything different really than the Chinese currency. The only thing is that there are restrictions, right? You can use it cross-border in certain instances, and you know, and more easily in certain instances than you can in others. So I think, you know, offshore CNH liquidity is still quite strong. And there is a lot of measures taken by central banks, including the HKMA, to ensure that there still is enough intraday liquidity in the market, et cetera, even with the launch of Stock Connect. So I think the concern and the measured steps have been taken, but still a lot of liquidity in the offshore market. Ultimately, they're one currency, and they will converge over time. We just call it CNH because it's a different rate.
And that's converging rapidly as well.
Hal Davis with Deloitte. The focus of your presentation seems to have been global interest in investing into China and getting Chinese currency to do that. Can you comment on the other side of the equation from a Chinese perspective? As I understand it, the closed capital account in part was to avoid the big sucking sound out of China of capital into the rest of the world. And we didn't see that, for example, in southbound trading on Stock Connect. So perhaps you can comment on that general area.
I think I think you're absolutely right. Maybe I'll just take it back a few steps to QDII, which was launched at a time which was probably unfortunate, which has not a great cachet with Chinese investors because of the reality of investing in the offshore markets at that time and what it meant to returns for Chinese investors. I think it's a huge dilemma, right? So there was QDII. It wasn't massively successful. It's still, you know, it's still ongoing and happening, but certainly not the hype that we have under QFI or RQFI for the investments in because of the returns you can get in the Chinese market. I think that's why the rebranding, if I can call it, of our QDII is coming along, which is, you know, RMB investments out for the offshore market. That being said, there's so much that needs to be done around the education offshore and the opportunities and the diversification from an investor perspective offshore that I still think hasn't happened. And a lot of that will be the challenges that we see around, you know, the high hurdle rates. So you have RMB appreciation, plus you have investments onshore that can yield 4-6%. Why would I go elsewhere? So there's the high hurdle rates. There's just the familiarity. You know, a lot of people are more comfortable with local market investments, et cetera. And we've seen that play out in Stock Connect as well. You know, we've seen, you're absolutely right, a very low quota utilization on the southbound flow. And some of that will take time, I think. And we're going to see the same under mutual recognition as well, which is the cross-border recognition of mutual fund products. So not a full passporting, but for example, an asset manager, an international asset manager could have a Hong Kong domiciled fund that then they offer into the Chinese market for sale. And the same issue will occur there, right? It'll be around brand recognition. Same for a company. Do you identify with the brand? Do you understand the brand? Do you want to invest in the brand? It'll be what kind of return can I get? You know, can an international manager who has a European, you know, equity fund compete with an investment onshore? So there'll be a lot of hurdles that will exist in that manner. But I think the outbound will see a change under the RQDII scheme. I think that could help, that rebranding could help to accelerate things. But definitely more interest at the moment in investing into China versus out of China because of some of the barriers that exist from an individual perspective.
Hi.
I just one. I couldn't agree more with Lisa, but I think for U.S. companies wanting to attract Chinese investment, you know, this is the first time where perhaps there is that opportunity. There is going to need to be this uptake, as Lisa said, with investor education. But I think the investment by corporates offshore represents the pent-up demand. Real estate assets, plant building, utilizing the lower cost of doing business in America from a productivity and a power perspective. As you end up creating, more synergies between the U.S., European, and other markets, you're going to see an increased familiarity with the products and services being offered through a variety of schemes. This is just the beginning.
Hi, Sandeep from Deutsche Bank. With the setting up of the Shanghai Free Trade Zone and other free trade zones expected in China, which a lot of people see as competition to the offshore centers, but more importantly, with capital account liberalization anytime between 2015 to 2020, do you still see a role for the RMB offshore centers in 2020? And if so, what role do you see for them?
I'll give a very basic answer and then let Lisa give the sophisticated answer. I think the challenges with the free trade zones don't represent on and offshore. It's really onshore in China, and how can you use those products and services to increase your market and accessibility onshore. Certainly, China likes to pilot initiatives, and therefore doing it small and seeing unintended consequences is a familiar pattern with product development. I don't think there's anybody that I work with that really sees a threat by the free trade zones to the offshore centers.
Thank you. So yeah, we didn't get a chance to touch on that, unfortunately. It's a big topic to cover in an hour. Sorry about that. But yeah, the free trade zones, obviously the one in Shanghai is hugely important for the development of Shanghai and Shanghai 2020 and what that means overall for the financial center or the center of finance for China, I would say. I don't think anyone argues with the fact that eventually Shanghai will be that center of finance for China. The free trade zone is allowing for the experimentation with that, and what does that look like. And I think it's a very positive step forward. That being said, while we have seen some corporates who have taken advantage of the free trade zone, I think that it will have to be step by step. There's still a lot of restrictions from a financial institution perspective on what you can and cannot do in the free trade zone. So I think they're important. They're an important experimental zone. I tend to agree with Rebecca. I don't think that this means that there's only one center of finance for China in the future. I mean, you look at any really developed economy and the different financial centers that exist within a country. I don't think this means the end of Hong Kong by any means. But all of these different offshore centers are creating an ecosystem to allow the flow of RMB around the world. And they'll all have a role to play in one way or another as we start to further develop it. And we can see that even from the development of the international payment system with China. So the gateway to Synapse, which is the RTGS in China. And we can see that, in the future, we expect these offshore centers would connect into that and act as a conduit to route, regional and/or country payments, through to China. So I don't think it means the end for them. It might mean some differences going forward, but certainly not the end.
And if I may add 2-3 sentences. What China does, they look at what's happening outside. They try it inside, with the latest technology, the latest view. So if you look at Shanghai or other free trade zone, it's really, okay, let's try with asset-backed securities market. Let's try insurance market. Let's try commodities. Let's try something. And if it works, fine. If it doesn't work, let's move on. So I think the free trade zone is really to look at applying the latest thinking, in financial markets or others. I can't agree more with you in terms of the future of the clearing hubs. Today's network is to provide liquidity, is as well to provide maybe sustainability for the 4 banks. Because if some of your capital is outside of China, you might be deemed as stronger. So there could be that. I think they will disappear or integrate into a network. We at SWIFT would love to be part of that network, I must say. But the reality might be that SIPs, the new version of Synapse, Synapse 2, would integrate all these clearing up into a framework. In my mind, the next one is, okay, when Switzerland will happen, when Brazil will happen, what about South Africa, Kenya, and these countries? So, RMB can be cleared everywhere, 24 hours. By the way, the RTGS here is open 20 hours and a half. So, that liquidity is there.
India. What is the happens in India?
So you haven't said much about the exchange rate. So in 2020, where is the RMB in terms of value with the dollar, for instance?
Can you see it?
Okay, I'm not a rate strategist. I'll qualify that by saying this. But we expect that there still will be mild depreciation in the medium term of the RMB. If you're asking me where I expect the exact rate to be in 2020, I don't think I'm bold enough to say that. But we do expect that there will continue to be appreciation, and eventually, it will get closer and closer to some of the larger currencies that are used around the world. But our view, mild appreciation. I don't know what that looks like exactly in 2020. I can't give you a number.
And if you look at,
sorry, go ahead.
Now, if you look at the trading band, it was 1%, +1, -1. Now it's +2, -2. Some people think that, in the next few months it will be +3, -3. It's getting there, and then you liberize it, and it will be a free floating rate defined by the markets.
Christy Ju from Jefferies. Follow-up question regarding the Macau, the role Macau plays for the RMB. Obviously, there is a very significant, internal cleaning in the anti-corruption effort in the past couple of years, and we are seeing now with this investment outside of China, it no longer needs approval up to this 1 billion. I wonder if there's any trends you see in terms of the money flow from Macau in or out, or any significant changes so far? Any pattern? I suspect underground money, of course, it's difficult to capture, but anything you have, any insight will be helpful.
From a sort of a policy perspective, I think the more legitimate channels that are developed to have true asset-backed transactions is the goal of China, and so that the need for centers like Macau for a variety of reasons will diminish. So they're trying lots of different tools to create legitimate channels for offshore transactions.
I don't have a view on
One that brought up Macau.
It's part of China.
Any other questions?
Can I ask a question of all of you? Who thinks 2015? Show of hands? No one.
Been very convincing.
I'm a buyer of late 2015, 2016.
Okay.
We're all against you.
I'm good with that.
Anybody whose brain's not filled yet. It's been a first-class presentation and discussion this morning. We've got some more time. We can come up and talk individually afterwards. Just a reminder that we're trying we've just installed new technology in AmCham, and we're still getting used to microphone use and for recording purposes and so forth. Our goal very soon is to have a members-only site on the website. So if your colleagues couldn't make this, or you couldn't make this presentation, you'll see at least the presentation part online. So AmCham is trying to be more IT friendly to our members, and generally speaking. So stay tuned. We're hoping in a month or two we'll be up and running at full speed. It will be a step-to-step purpose. Thank you. That's why you shove microphones in your face, because otherwise we can't hear the questions. We do want to keep Q&A in these sessions as well. Again, thanks to the panel. I've got some small AmCham gifts. Present. These are not priced so high that you'll be in trouble financially or reporting-wise. Thank you. Thank you again all for coming. Please come up and talk to the panel yourselves, and I'll see you again at another AmCham function soon.